Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Monday, the 25th of March. I'm Jeffrey Halley and my co-host today is Samantha Voon. And we welcome a great friend of the show, Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, welcome to the show. Happy Monday.
Good afternoon, Jeff, Sam. It's good to be here. Thanks for having me on.
Right, so let's have a look at Asian stock markets around the region. To start, as we normally do. It's a bit of a mixed day in Asia today. Nikkei 225 is down 0.57%. Shanghai has risen by 0.41%. The Hang Seng in Hong Kong is up 0.4%. And the ASX 200 down in Australia is up 0.59%. Meanwhile, the Kospi in South Korea is down 0.4%. Singapore is down 0.33% as we await that inflation data that's due out, right about now. And in Kuala Lumpur, the KLSE is down 0.35%. Vishnu, what do you make of today's move so far?
Well, I think there's something in there for everyone. So you take, our sense is, partly because of the seduction from Chinese policymakers led by Premier Li Jiang, that there's a lot of space for stimulus. That could be giving a little bit of a leg up for Chinese equities. And also, to some extent, we also saw the morning opening up with some support in the renminbi. So they've checked any particular risks to do with an unmitigated drop in the renminbi that could lead to knock-on capital outflow risks. Whereas I think the negative futures in the US and perhaps some inherited concerns about Russia could be weighing on the rest of the markets as they probably now do a stock take of the policy-driven risk on that we've seen last week after the rash of central bank meetings.
So let's talk inflation for a moment, Vishnu. We saw Malaysian inflation rise unexpectedly to 1.8% this morning, and I'm just looking at the Singapore inflation data that's hitting the screens at the moment. It's also coming in higher than expected. Core inflation rising to 3.6% year on year. That's well above the 3.4% expected. And also the headline inflation rising to 3.4%, slightly above the 3.3% expected. Are there any implications here for the strength of the Singapore dollar? We do have the MAS meeting coming up in April, their 6-monthly policy decision. Are we going to see, is this going to be enough to stay the MAS's hands with regards to a possible policy easing?
I think, at the end of the day, this is probably going to stick with our script that in April, the MAS was never set to do anything in any case. They're probably going to play a very cautionary role. Whilst they rightly recognize there are more two-way risks, they're not hastening to ease policy. They're allowing, and that's partly due to the FX-based policy that allows for some adjustments as the dollar adjusts, and so there's no rush to get into it. Two-way risks remain in place. The policy tensions also remain in place because clearly there's an inconvenience of sticky inflation, yet there are downsides that cannot be ignored. So that only doubles down on the policy tensions. The interesting thing for us in Asia is higher inflation might not lead on to stronger currencies with the assumption of policy being held tighter for longer in comparison to the West. Instead, it might reflect policy dilemmas and the trade-offs involved. And if real rates are dropping in Asia, then that could be correlated with weaker currencies instead. So the interpretation of higher inflation in the region becomes a lot more nuanced and fluid.
Right, so we may not be... What do you believe this will mean for Singapore dollar strength? Obviously, the Singapore dollar has been very, very strong over the past year. Are we seeing that the end in sight for the Singapore dollar strength?
I'm going to be a little controversial here and say, inflation is really a sideshow. The renminbi is the main event. So insofar as the renminbi remains rather fairly stable, you'll find the Singapore dollar on a bilateral basis against the dollar, against the US dollar, will remain fairly stable. But on a trade-weighted basis, we've noticed that the Singapore dollar is actually, pretty rich, near towards the top end of the range. So the scope for a trade-weighted, for the trade-weighted Singapore dollar to outperform is very limited. So that's something that we pay close attention to.
Mm-hmm. Vishnu, staying with current markets, US bond yields moved lower on Friday, but the US dollar continued to strengthen broadly. Notably, Asian currencies weakened and the AUD fell below 0.65 and the New Zealand dollar fell below 0.6. What is behind the recent US dollar strength?
We have our pick of things to blame, but clearly the dynamic that you set up, which was a softer US Treasury yields, yet a stronger dollar, reflects two things. One, I think it reflects a little bit of risk off, particularly entrenched after the Russia event, which is a haven reflex. You get more people buying US Treasuries, so the yield fall, but that doesn't in any way get in the way of dollar strength because it's a preference to hold the dollar as well. So that's one event. The other is the drop in USD yields, I suspect to some extent on Friday, was led by Bank of England comments that they're less worried about sticky inflation. So it then brings about the possibility that the Bank of England could move earlier than the Fed. And so the whole notion of pivot being weak dollar is now perhaps reimagined as pivot led by the Bank of England being a weaker sterling and weaker currencies elsewhere because of US exceptionalism. So whilst USD yields follow the broad global yield trend of coming lower, that does not take away from the comparative allure of the dollar as well. So we've got two things working for it. One is competitive pivot supporting the dollar. The other is the haven demand also giving bid to the dollar. So I think these two dynamics are worth thinking about as we get into the next few weeks. Will the dollar still have some two-way? Yes, absolutely. But how it plays out, I think we'll still have some backstop for it.
Okay, well, let's look at the week ahead now then. On the global data calendars, is there anything standing out for you this week, Vishnu?
It is a fairly quiet and shortened week in most parts of the world, with the Good Friday and the Easter weekend coming through. You've got a bumper Friday of data releases in Japan, but I think after the BOJ decision, that's probably not going to steal the thunder in a big way. We've got some inflation releases here and there. We probably will see slightly stickier inflation, but it would probably, and this is just a guess, it's probably not going to overturn some of the sense that we're getting where central banks are getting less concerned about sticky inflation, which means all else equal for the same inflation read, they are less likely to hold rates higher for longer. The willingness to cut is now greater at the margin. BOJ summary of opinions, of course, I think will probably be something that a lot of people pay close attention to after last week's meeting. But really, this is the week of the lull for policy, but perhaps a week of unexpected and unknowns for geopolitics.
Thanks for your insights today, Vishnu.
Pleasure is mine.
We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore on BizTech's Midday Asian Market Watch. I'm Jeffrey Halley.
And I'm Samantha Voon.
And this video and podcast will be on our website, www.biztech.asia, our social media platforms, as well as our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in today.